Okay, so here we go. We're going to explore exactly how to read the tape. So when you're reading the tape, back in the day when people were reading the tape, what they were looking at was this type of scenario where you have a date and you have the different digits. So all of these digits are accompanied by the corporation or the company that's being traded. So all of these numbers are being fed into a system or um, a, a telegraph type system that is feeding market information in a stream. So it's like just like streaming a video, but the problem with tape reading is that back in the day, this was a very slow process because there was about a 20-minute delay. And also another difference that you notice is that the price was quoted with fractions. And this actually stopped rather recently. It stopped in 2001. So when you're seeing a tape, this is what you're actually looking at. And this is a typical example of a tape. So the modern day picture that we see of a tape is exactly this. So it's basically the same thing. What we have is the company, and we have the price, and we have the movement of price and the direction of price. So this is how the modern ticker looks, and this is just how it works. So it tells you what the price was in relation to yesterday. So it's looking at the current moment to gauge the change in price. So all of this information is very critical because you're able to understand the sentiment of the market based on what is happening at the current time. So this is how the stocks used to be traded. The stocks and all of the currencies were once traded. You actually did not need to look at the screen. All you needed were these numbers. And this was a way that a lot of people made a lot of money. So all of this is still very relevant today because when you're trading price action, what you're trading is the moment that price is changing from one area to another area. So all of this is what you're trying to capture. What you're trying to capture is the change. This is why it's called an exchange. So the price change is what you're actually after. So prices change. So all transactions happen on an exchange to create price difference. So this is what it's all about. We're trying to find these transactions in areas where we are able to find a difference in value. And when we find this difference in value, we're able to see that we trade in such an environment where we are looking at current value according to the current market conditions. So this is exactly what trading is all about. So it's all about the price change. So trading is not about charts, it's not about anything. It's just about price change. And that's how the exchange happens. If it's a stock exchange, a futures exchange, or a commodities exchange, it's all really the same thing. So the difference of price is determined by the difference in time. So it's only a matter of time until things change. So this is how the stock ticker keeps on ticking. So price reflects current value, the value right now. And this is what we are looking to see if it actually changes. So so the price action trading with tape reading only needs two things, and price is the first component, and volume is the next one. So volume is velocity. This is the same thing. When we're talking about velocity, what we're talking about is volume. So velocity determines the volatility. The volatility is the velocity. The velocity is the volume. So the fiscal policies determine the levels of volume, velocity, and volatility. So what we're trading is volatility according to the volume. So the velocity is what we read in the tape. So what we're looking for is strong velocity in price, which is just strong volatility, which is strong volume. So this is all that we need. And from the ticker tape, everything we need is provided. So charts show you price, and they also show you action. They show you volume. So that's what price shows you. So the characteristics of price show you this. They tell you this. They explain what the price action is based on the activities that are happening on a ticker tape. So this happens against the tick of time. So everything that we end up seeing on a chart is a derivative of what's happening on the ticker tape, or what's happening in real time. So this is a ticking clock. So what's happening in real time or current time. So this is how you trade currencies. So what's happening at the current time is what you're actually trading. So all of these ticks are accumulating into movement. So all of this movement is happening. So there are only two numbers you have to figure out for trading success. So the thing that you really have to understand for all the trading success is price and is volume. So if you understand these two things, then you're able to understand all price action. And you're able to understand tape reading, the basics and the complex. Everything about price action is reflected in the tape. Everything about volatility is reflected in the tape. So let's take a look at a ticker. So this type of chart is called a tick chart. So it shows the different ticks. So a tick is just a period of time. So customarily, I'm sure we're used to seeing candles. So candles are actually showing us ticks. So only that these candles have more information in terms of being pictorially based. And they do make it easier for you to see what is happening in price action. So price action itself is not the chart. Price action is the change of price. So here we have our ticker here. So we have the Dow Jones, and this is a monthly chart. So we're seeing that we have this price here, and we're also seeing that the price is increasing or is rising. So we already know the direction of price, and we see the difference of increase. And this is what we're seeing. And here we actually have the open, the high, the low, and the close. So these pieces of information are all very vital in understanding where price opens, its high, its low, and the close. So if you're able to get this information and understand what it actually means, it will mean that what is reflected on the chart is the tape. So what you want to be looking at is to see what happens with these numbers. So the trade is going to be based on the levels according to the evaluation. Okay, so this is a tick chart, and this is showing the tape. So this is just a twin brother of what the tape actually looks like. So for you to be successful in trading, you have to know tape reading. So here is how to make money on Wall Street. So this is interesting in the sense that Charles Dow is the inventor of the Dow theory, and he's also the captain of Wall Street. He's the one who founded the Wall Street Journal. So he has the Dow theory that determines a trend when price breaks a significant high resistance. So here we are talking about the first people who invented Wall Street, or the actual culprit who we actually refer to when we're talking about Wall Street is the person who edited the Wall Street Journal and wrote his name in history. So Charles Dow of the Dow theory. So right there we're just looking at the Dow Jones index here, and this is what we use to measure what is happening on Wall Street, what is happening in the whole world's economy. And we have that because of Charles Dow and Dow theory. So the Dow theory is very important in understanding how to actually trade. So when we're talking about the Dow theory, it's all about how the price trend is detected and determined when price breaks a significant high, a resistance. So this is when price goes above resistance, and this is classic basic support and resistance and price action. So all of the price action that we're actually talking about comes from this place of Dow theory. So understanding this is understanding what is happening. So the very important thing that we have to understand when we're using price action and tape reading is to always look at the bigger picture. So on Wall Street, the Wall Street Journal was based on information about market indexes. And everything that is happening in Wall Street right now is based on market indexes. So when you're able to identify this trend in a price break, you're also supposed to be identified within the market. So this is where we get this type of index, like the Dow Jones index, the S&P 500. So this is what actually determines what is happening on Wall Street. So it actually shows us all of the price action. So one thing to really understand is that America is built on Wall Street, and that is just a fact. And this is a ticker tape parade where, this is where heroes go and they parade, and what's being thrown in the air are actually tapes. These tapes, because this is showing the wealth of this nation, that all of this money or all of the growth in America is because of Wall Street, and that is just how that is set up. So, so here what we're talking about is the ability to read the tape. So, so when we're talking about the tape, one thing that we really have to get is that you should not fight the tape. And the meaning of not fighting the tape is to say that do not trade against the trend. So today what we're talking about is always trend trading. But what it actually means is not fighting the tape. So when we're talking about not fighting the tape, what we are referring to is being at one with the direction that is already dominant. So this is why we are looking at the price change in relation to yesterday. So we're looking at the current price, but in relation to yesterday. So this is how we actually find value in everything that we will be trading. So in a few minutes, we're gonna actually discover that everything that is tradable is what is already presented in the price. So you actually do not need anything, and anything besides the actual tape. And this is very crucial in understanding how to trade within the trend and how to be able to actually read the tape. So we've already determined that the tape is nothing but the movement and the volume. So when you understand that simple fact, you'll be able to recognize the fact that whenever price is moving, it is moving based on volatility. So what is important is not actually only the price, it is the time and the volume, so that you can know what is likely to happen going forward, because this is where you make the money. You make the money in the invisible zone. You make the money moving forward to what is still unknown, to the variable. So we're gonna just look through some information about that